Sure.
What do you think about life insurance?
I don't know
You're
enough to give
single?
an opinion about it.
Dude, you're single. So let me give you some facts on it. Let me give you some info because I am kind of educated on it. So backstory on this is I was a life insurance rep in college, and that's what actually showed me what day trading was. So I was
Really?
as an intern for Northwestern Mutual trying to sell life insurance, and then no one would buy life insurance from me because I was 19. So, and it's funny because now her brother, and she did the internship too or she did it a year after me, not in the same program, but different programs, just funny. And her brother's actually a life insurance rep now for the same company. I ended up realizing that no one would buy life insurance from a 19-year-old. I just accepted that. So I started to study for my Series 7 so I could sell stocks because I was like, I know people are going to want to buy stocks from me. I know it. In that process, I guess just stumbled across day trading. I think these people like making way more than 6 or 7% a year. And I just fell in love with it because it fit every bill that I wanted. And that's when I was like introduced to day trading, but I came into it from selling life insurance. So back to the original topic, life insurance to me has always been something that I found value in, and also because I've seen it impact people's lives personally. So like if you ever were to get sick or, actually die, you don't leave your family effed up.
Yeah.
Basically,
Yeah.
you know what I mean? Especially when you have student loans.
Yeah, I
or you have
understand the
other debt.
concept behind it.
So what I've done for me and Riley is gone with this. I have to give credit to the guy. His name is Garrett Gunderson. He is really promoting on his YouTube channel, and I can link that too, this idea of cash flow banking. And he wrote a book called What Would the Rockefellers Do? And I have the PDF. I can give it to you if you'd like. And basically, he talks about how the Rockefellers made their family wealth last way longer than the Vanderbilts, two really famous families that a lot of people know about, right? From back when America was just first being founded in the Industrial
I
Revolution.
talk a lot about that in my course, by the way.
Really?
Yeah, a lot.
So then this would probably resonate with you. So the Vanderbilts basically are broke. They don't exist anymore, but the Rockefellers still do. They made that fortune last.
Yep.
The reason for that is because the foundation of it is built in this infinite banking system that you can create with your own cash flow life insurance policies. So they're overfunded, cash value, whole life policies, not any of that term bullshit. Listen, term policies, for anybody that's thinking about buying life insurance, term policies will actually pay out less than 2%. Meaning most people that buy term pay, and never get paid back because they don't die while the term happens. Term is a scam, in my opinion. It's just a business for the insurance company. So what you do is you go with whole life, you put money into it every month, or you pay for it for the year, whatever you need to do, and it builds up cash value for you to the point where if you layer these policies, and you can then, and again, this is all Garrett's area and he talks about in the book, but you can endow them, I think is the right word, to a trust. That trust can then actually be used to get even more policies out on individuals in the family, and you can layer all these life insurance policies that are building cash value for you. So I know I'm kind of going, but follow me. So as they build cash value, you can then go to the insurance company and say to them, hey, I have a whole life policy with you that has $500,000 in cash value. This is a couple years after you've been paying into it. It's getting, 7% a year tied to, a guaranteed return that the insurance company guarantees. This is a guarantee. You go to them and say, look, I have this $500,000 in cash value. I want a loan against myself. I don't want the 500 because you can take the 500. Cash value is tax-free money. You can tax-free money. So you could take it, but you don't. You take a loan against it. And now you don't have to go to Wells Fargo. You don't have to go to TD Ameritrade or Thinkorswim, whatever the bank, any of these banks. You don't have to go to any bank. You can go to the insurance company and say to them, look, use the cash value as collateral and give me the 500 grand. And then when you pay that back, you can actually pay the money back with a little bit extra into the policy is the idea. And you can kind of keep it into this never-ending infinite banking system. Now, that's my explanation of it, and I'm not super educated. I'm not a financial advisor, so that's not investment advice.
Yeah.
But I would recommend that everybody just Googles infinite banking, cash flow banking. It's really interesting, and it's weird because it puts you in this point, and I want to hear your thoughts on it, but it puts me in this point where I know what I know, and I've seen the numbers, and I want to be like the Rockefellers, not the Vanderbilts. We want to have a legacy like that, and we are in the process of setting up a trust and doing those things. So why would I do anything but that? Would I go, for example, get $1,000 a month car payment or put $1,000 a month into life insurance? The car is cool, but if my goal is legacy, the life insurance is 100% a better decision.
Okay, so let me tell you my problem with that.
All right.
In hindsight, Sounds phenomenal. Just like socialism.
Sure.
The problem is if you're not able to move that money out of cash, because cash is trash.
Fair.
By the time you do get to reap the rewards of that cash,
Right.
I'm scared you're not going to be able to buy what you want to because it's lost so much of its purchasing value.
That could be. So you're saying like if Riley and I keep buying the policies, because like our plan is to buy them every year, if not multiple ones every year. So if we keep doing that, you're saying, well, yeah, you might have $3 million in cash value in 10 years.
It'll buy you a cup of milk.
Right. So if the dollar loses all its value, then it's not worth shit.
And I'm 100% sure it is.
And that's a very good point.
Yeah.
So maybe the idea would be it's never just put all your eggs in. It's not like, look, I only have 1,000 free. I'm going to put the 1,000.
Yeah.
Right. You know what I mean? This is extra where you're diversifying, but
Remember, savers are going to get punished.
of course, but if you're putting this money there with money that you normally would be putting, let's just say at a Wells Fargo or a bank, I think this is definitely a better deferred savings account. And also it gives you the benefit of the life insurance, because if you were to, like, if you're a business owner like me and I was to pass, I wouldn't want to leave Riley with the things that she would have to deal with. You'd rather at least leave them with money and then the things they have to deal with too. You know
For sure.
what I mean?
A better approach in my eyes would be, I think if this is not an idea already, somebody's going to listen to this and probably make it one. So let's say you started a life insurance policy, but instead of keeping it in cash value, they only keep a little bit of it in cash, and most of it goes into things that can appreciate or hold its buying power.
But they're never going to do that. Like
But they're
gold.
not going to do that.
No, they're
Yeah,
not going to do that.
Exactly. If that was the case, then I'd get it today.
Yeah.